is a new topic, as many of you know. There's some simplicities to it, there's some complexities to it. But at the end of the day, we want to get all of those points addressed so that you have confidence in how you're approaching this for your firm, how you're approaching this for your clients, and how you're guiding your clients, broadly speaking, to get compliant and get back to running their business, effectively avoiding these significant government fines. So I'm your host, Frank Tumminello. Nice to meet you all. I am CEO and co-founder of FileForms. A quick background on myself: I come from a decade-long career in working within the financial services industry. I studied physics, math, and computer science in college, but ended up going into an investment banking role where I was helping banks through mergers and acquisitions in addition to other asset managers. After 2 years there, I got into a role at a middle market private equity firm in Boston, where I was primarily investing in founder-owned and operated businesses within the financial services, healthcare, and insurance space. And then worked for some time in a payments business through an M&A and roll-up strategy there prior to joining FileForms, and then ultimately gained enough experience working over a decade-long period working with financial services businesses to ultimately jump on the opportunity to build effectively a solution that's going to help millions of businesses file their BOI reports in a very streamlined and secure manner. My co-founder in FileForms is a CPA by trade, so obviously plenty of accountants and CPAs on the line today. So he and I have a very complementary skill set as we approach building this business from the ground up to effectively serve the CPAs and the law firms and the PE firms and the like, who ultimately have a good amount of filing to do by the end of the year. So as we get into the presentation, just to kind of summarize the agenda, we'll touch a little bit on who we are. Then we'll kind of get in why you should care about the Corporate Transparency Act. We can then kind of work our way into an overview of kind of the details of the CTA and BOI reporting. That chunk of the presentation might be a little bit redundant, so maybe we can breeze through that just given the nature of CPAs being on the call and likely have heard a lot of this stuff before. Deadlines and penalties, they're right around the corner, so hopefully we'll address that. And then we've had the benefit of meeting with FinCEN a few times over the last couple of weeks, so have some great insights that we want to share towards the end. We'll do polling questions and questions generally throughout, so please do use the Q&A feature of the chat to log those questions so we can get them addressed. So just to get right into it, quick background on FileForms. I mentioned we were founded by and designed by CPAs, attorneys, and industry professionals. We're based in South Florida, but have a hybrid team of about 13 members throughout the U.S. We do have over 1,000 CPA and law firm clients in all 50 states. So we really have built a solution and continue to serve the masses that ultimately represents millions of businesses within their networks. And we do have an award-winning piece of beneficial ownership information reporting technology, in addition to SOC 2 compliance and a direct integration to FinCEN's API, which we're very excited about to ensure security, privacy, and simplicity in the filing process. And the Corporate Transparency Act, it's something getting talked a lot more and more, but really it's existed for quite some time, really since 2021 was when the law was passed, and rightfully so. The nation was consumed with the COVID pandemic and was not focused on corporate or federal compliance at that point in time. But really the law was enacted to curb illicit financial crimes. Many companies out there are leveraging, autonomous shell companies to, launder money, avoid taxes, and the like. And essentially, the government is looking to crack down with this new law called the Corporate Transparency Act. And the government's really looking to use beneficial ownership information reports, also known as BOI reports, to collect information on these private companies initially, store that in a database, and effectively use that database in addition to other databases that government agencies have to help kind of police the financial system a little bit more specifically than they have. So existing companies have until the end of the year to comply. So that's 98 days away from today. And then new companies, or those that were formed prior to January 1st, 2024, those businesses only have 90 days from their formation date to file their initial BOI report. So deadlines are quickly approaching for the lion's share of businesses out there who do need to file by the end of the year. A lot of folks might not be familiar with the Financial Crimes Enforcement Network. I think, for example, most folks are more familiar with the IRS because obviously folks have had to file taxes, but FinCEN's a little different from the IRS. FinCEN's its own government agency. It's a department of the U.S. Treasury, and ultimately the agency was stood up in the late 90s to enforce financial crimes. Now, initially, FinCEN had kind of resources and priority to really enable transparency within the banking space, and then kind of extended to the real estate space. And now, with the Corporate Transparency Act expanding their jurisdiction to small businesses, so FinCEN will be the government agency that's collecting the BOI reports, storing that information into a secure database, and then providing that database access to various three-letter agencies within the government, in addition to select financial institutions. Ultimately, they're looking to protect United States citizens by working closely with small businesses to help, crack down on money laundering, and ultimately that is the premise of this law. So, we've certainly spent a lot of time with FinCEN to address a lot of the concerns, a lot of the open-endedness, but want to share that with you all today. But that's kind of the overview on FinCEN. A lot of people don't realize that money laundering is a billion-dollar plus, several billion-dollar plus issue, drag on our GDP, huge issue in the United States. Because the Corporate Transparency Act, or BOI reporting, has never existed in the United States, but until now, but has in other large world economies. It's believed that actually the U.S. has somewhat become a safe haven over the last decade or so with respect to criminals, coming to the United States to hide or launder money. So that all's changing now because the government's had enough of these drug dealers and illicit arms dealers and global terrorist groups coming into the United States. So this law is certainly going to help prevent the ease of transacting kind of under the table, if you will, using these shell companies. Now that the government's going to have this database, they're going to be able to police the financial system better. Another reason why you should care about BOI is virtually all small and medium-sized businesses throughout the United States are going to have to file a BOI report this year. So 30 to 40 million U.S. businesses will need to file. Very much a broad-reaching change of regulation and reporting requirement. FinCEN's actually now and has been accepting BOI reports, and many of them are coming due. Another just point for folks to consider, especially those who are assisting others with the filing process. The analysis sometimes in the data collection process can be complex. It can be time intensive and also can present some cybersecurity risk. So definitely want to have good processes in place so you're not exposing your data or your client's data in the BOI reporting process. Some states have not exactly taken a stance yet on UPL, or unauthorized practice of law. So once again, we want to help you all understand kind of where you should help your clients and where you potentially should opt to guide them to another resource that might be a little bit better of a fit in serving maybe a more complex ownership structure. And then ultimately, many of your clients, if not all of your clients, will need to file. So it's really timely to be learning about these topics and learning about the solutions that exist to ultimately get the filing complete so that your clients can avoid the significant fines from the government. But really, we've been in business focused on this law for 2 years now, and have been working with a wide variety of businesses now, serving their BOI needs and answering the questions on the new law. But really, in the early days, over a year ago, there wasn't much publication on this law, despite the fact that 32.6 million entities are expected to file, which is FinCEN's estimate. So, now more recently, there has been much more publications picking up all the different headlines and needs to file and who needs to file, who's responsible. But, initially there wasn't much coverage. It's been expressed to us that FinCEN will now be ramping up their coverage as well and their awareness efforts with commercials on TV, radio, publications, and kind of publishing brands like those on the screen. So we will see more activity as a result of those efforts. And honestly, one of my questions to FinCEN is, why'd you wait so long? Because ultimately, it's leading to a huge amount of forms that are going to be filed in the back half of 2024 here. So maybe this is a good point to pause before we start getting into kind of the details of reporting companies and BOs and company applicants. Why don't we pause here for our first polling questions and see if there are any questions that have been queued up so far. All right, so first polling question. How are you doing? Good, fine, better now that I'm on an NSA webinar. That's a good one. Please let us know. Give it a few more seconds, 10 more seconds. See if we can get to above 95% participation. We're at 93% now. Maybe one more. All right. 93% participation, 58% people doing good, 17% fine, 25% doing better now that we're on a webinar. That's great. And how are we doing with other questions?
Yeah, so we have two questions so far. Alejandro is asking, do companies that had closed doors as of December 31st, 2023 need to report?
That's a great question, and it's been one that FinCEN has distributed some FAQs on recently. The process of dissolving the entity can be quite complex. It actually differs state by state. But if you truly did dissolve your entity outright, absolutely, no ifs, ands, or buts, then you will not need to file because you completed this dissolution process prior to January 1st, 2024. But I would emphasize that you want to make sure you just dissolved your entity correctly because a lot of people mess that up. What's the next question?
The next question, John said, a state CPE class concerning account updates made the claim that CPA should not file the BOI for clients due to independence issues. Any thoughts on that claim?
A state CPE class concerning accounting update made the claim that the CPA should not file BOI reports and due to independent issues. Any thoughts on that claim? I think the more significant approach is just making sure that your general liability or E&O insurance carrier covers this, and that your state association isn't going to have an issue with you providing some level of guidance or service. So it's really state by state. Maryland, New Jersey have spoken out openly about UPL, and that, for the most part, guiding clients through a BOI filing is not considered UPL. But it really does depend state by state.
Okay.
Maybe one more, and then we can keep going.
For sure. Edmund asks, does Pennsylvania consider filing these reports the practice of law? Have they issued any opinion?
Yeah, I haven't heard anything specifically from Pennsylvania just yet. However, New Jersey did rule that as long as the ownership structure is not complex and there's no kind of open-endedness to who's a beneficial owner or who has substantial control, for example, that there is no issue for guiding clients or filing on their behalf. It's really when you have complex ownership structures where maybe entities own entities and there's stock options and a trust involved, for example. Those start to be more kind of legal judgment calls, and given there's very little precedent of BOI reporting done correctly or done incorrectly, it's best to maybe take those more complex cases and provide them to firms like us or firms that have legal expertise. All right, we can take a pause on the questions and get back into the report, and then we'll take another pause and maybe 2 slides. So thank you. So really the 3 most important questions when starting to kind of get your arms around BOI is, first off, who's a reporting company? What is a reporting company? Do effectively I need to file? If you are a reporting company, which will help you establish, who are the individuals who will be reportable beneficial owners? And then once you have determined that, you can determine when your business was actually formed. And if it was formed prior to January 1st, 2024, you actually don't have to worry about company applicants. But if you were formed after January 1st, 2024, then you will have to disclose your company applicant, and we will shortly let you know what a company applicant is. So first, we will start with a reporting company. So there are domestic reporting companies and there are foreign. We'll start with domestic. So a domestic foreign company is really any legal entity or other company that is created by filing a document of registration, either formation document or a registry document with the Secretary of State or similar office, including tribal jurisdictions. So any business that's formed, registered at the state level, such as a Delaware limited liability company or a California for-profit corporation or a Florida homeowners association, so on and so forth, those would be considered reporting companies. So hopefully that's clear. For foreign reporting companies, pretty similar, just a little nuanced. A company that was formed under the laws of a foreign company, foreign country, but then registered to do business in the United States or other tribal jurisdictions. So this is a business that was formed perhaps in another country, but has an operating presence in the United States, thus also is registered to do business in the United States. That would be considered a foreign reporting company. So 2 types. Those are the 2 types, and it really has to do with whether something's being registered at the state level. So once you determine, okay, I do file a registry document at the Secretary of State, the next step in this process is, do I qualify for any of the 23 exemptions? Now, these 23 exemptions, despite 23 being a relatively large number, these exemptions are extremely specific. Generally speaking, businesses have a good sense of whether or not they fall into one of the buckets, and I like to break them down into the 6 most notable exemptions below. And the first really is my company operating in a highly regulated environment? This includes banks, publicly traded companies, insurance businesses, certain types of exchanges. If you operate in a highly regulated industry and already have a governing body that's you're being regulated by, such as the SEC for a publicly traded company, then you will not have to file a BOI report. The second bucket is any certain large registered investment vehicles or registered large investment companies. Once again, those are reporting with the SEC. Thus, they do not need to also file a BOI report. The government already knows the beneficial owners of those businesses. Thirdly, any tax exempt entities such as 501(c)(3)s or nonprofits. Once again, in order to get those benefits, exemptions from taxes, the government's going to know who those folks are. The fourth bucket here, large operating companies. I want to just highlight that to be considered a large operating business, you need to meet all 3 of these characteristics that I'm about to walk through. The first is have 20 or more full-time employees. Furthermore, also have a physical presence in the United States and also have more than 5 million in gross receipts. So if all 3 of those characteristics are met, then you are deemed a large operating company and you will not need to file a BOI report. If only 2 or 1 of those characteristics are met, for example, say a company does have 20 or more full-time employees, does have an office operating presence in the US, but doesn't have 5 million in gross receipts, then that business would not be a large operating company and would need to file a BOI report. And then the last 2, one, subsidiaries of certain exempt entities, such as, the subsidiary of a tax exempt entity would also be exempt. That subsidiary needs to be wholly owned by that exempt entities. So therefore, any partially owned subsidiaries of exempt entities would still need to file. And then any inactive entities that are properly and fully dissolved with the state before January 2024, those would also be exempt from filing because they've just had no material transactions recently. So hopefully that's all clear with respect to what is a reporting company. Next up is what is a beneficial owner. So a beneficial owner, once again, there's two types. The first type is anyone who is directly or indirectly exercising substantial control or key decision-making power over the business. Secondly, a beneficial owner can be anyone who directly or indirectly owns or controls 25% or more ownership interest in the business. So two types of beneficial owners. It's either the quantitative 25% threshold or more, or kind of more qualitative substantial control. Examples of substantial control would be a COO or a CEO or any C-suite executive, anyone who has controlling over the board or any controlling decision-making power to remove C-suite executives. That would be someone who would be considered a beneficial owner despite not having any true ownership structure. And then obviously, if you have ownership structure, you're certainly considered a beneficial owner. So a few examples would be kind of a husband and wife owned general store operating through an LLC. Maybe they own 50-50. Maybe one owns 100% and the other one operates the business regardless. Though both would be considered a beneficial owner of the business. Second example, COO of a 10-person tech company operating through a corporation. So despite that despite that COO not maybe having actual ownership percentage of equity, they do have a C-suite position. Thus, they are considered a beneficial owner. Here's a lot more detail on beneficial ownership interests and substantial control. Various examples of what is a senior officer, what is an important decision maker. So please do spend some time with this for especially those more unique ownership situations. And then lastly, on this section is who is a company applicant. So as I mentioned, company applicants only are relevant to businesses that were formed on or after January 1st, 2024. So if you did not recently form your business, you will not need to worry about reporting a company applicant, which is great because if you formed your LLC before January 1st, 2024, maybe even formed your corporation many, many years ago, you're not going to have to go track down who you formed that business with in order to get their info and disclose it on your BOI report. But effectively, the company applicant is that individual or corporation that helped form or create the business initially. So it could be a lawyer, it could be an online corporate services provider, it could be a CPA potentially, but it's anyone who either directly helped form the business or anyone who was controlling the process of doing it. So at times, a company applicant can also be a beneficial owner if it's a self-starter who's doing it on their own, potentially filing documents with the Secretary of State. But just want to triple emphasize that if it's not an entity that was formed recently, you will not need to report a company applicant, which should save a lot of folks some time tracking down company applicant info. So before we get into just, the BOI report and what exactly is on the report, I see some questions queued up, but let's do a poll question and then maybe we'll get through 4 or 5 of the questions. All right, we're really getting detailed with these polling questions here. What color is the sky? Blue but cloudy. Wow. We need to make these a little bit more exciting, but I appreciate everyone participating to get their CPE credit. Thank you.
I think they're either allowed to be very specific or just incredibly general. So
whatever works. We'll get specific on the other questions. It's completely fine with me. All right. I guess we could call this any last stragglers. Got 95% participated. All righty. Let's see some more fun questions for BOI and CTA detail.
I'll just go in the order that they were placed in.
Cool.
So where do we stand with court cases stating that this is unconstitutional?
That's a great question. So on Friday, well, actually, let me take it from the start just so folks have lay of the land a little bit. So back in March, there was a district court, Northern District Court of Alabama, that ruled that the CTA is unconstitutional. The NSBA, which is a group of about 40,000 businesses, brought forth the case. They were the plaintiff. They were able to get the judge to rule in their favor at the district court level. FinCEN quickly appealed that judge's determination, which elevates that case to the circuit court. And FinCEN was very clear in stating that for now, the plaintiff group, those 40 million businesses, will be temporarily exempt from reporting their BOI information until this court case runs its course. Now, for that matter, everyone else, FinCEN was very clear, still needs to comply with BOI as this court case runs its course. So despite the court case, FinCEN's very clear that everyone else, 40 million plus businesses, will still need to file. Oral arguments at the circuit court level are expected on Friday of this week. But we've spoken to just about every single resource in the legal community and also FinCEN directly. And it is very evident that the circuit court case will get dragged out past the year-end deadline. And it is also very evident that the deadline is not being extended. So despite the fact that there is a court case in the district court around unconstitutionality of this law or it being an overreach of government jurisdiction, unfortunately, folks can't really rely on that as a reason not to file. Furthermore, just to give you a little additional perspective, there was a district court judge in Oregon over the weekend that ruled exact opposite as the judge in Alabama. So you're starting to see splits between states as to whether this is unconstitutional or not, and effectively that's going to make this drag out not just past year end, but probably quite some time thereafter, and potentially even get elevated to the Supreme Court. So it's probably a long road to get to a final answer, but thus far, that's kind of the current lay of the land with the court cases. The punchline is FinCEN's still expecting folks to get compliant with BOI by the end of the year.
Awesome. What is needed to be done if in 2024 a shareholder or partner sells his or her interest in the entity?
A new BOI report will be needing to be filed with the new ownership structure. Whether that's a new BO and then one removed, it sounds like in this instance.
Cool. Excuse me. If a corporation ends business 12/31/24, end of the year, and files a final 2024 tax return in March of 2025 and then dissolves with the Secretary of State, does the corporation need to file the BOI both in 2024 and 2025?
Yes. Yes, they need to file the initial report. And then once they are fully dissolved, they're technically exempt. So then you need to file another report.
Awesome. What if the company did a name change or reorganized state entity from incorporated to LLC as of January 1st, 2025?
You'll need to file a report for that business. You can either change the pre-existing report or file a new report.
Cool. What if you dissolve your entity in 2024? BOI has not been filed yet. Do they still have to file?
Yes.
Okay.
You had to dissolve it prior to 2024 to not have to file.
Okay. I attended a webinar last week that said you still had to file BOI even if you dissolve. That filing responsibility was established in January 1st of 2024. What? Okay. I'm not quite sure what that one was asking. Um, asking, I guess, are you sure? Okay. Yes.
We'll do one more and then we can get into the detail
Yeah.
here.
Would you discuss rules of attribution as it relates to ownership to achieve the 25% rule?
I'm not sure if I understand the question. Can you repeat it again?
Yeah, so the full statement that they said is I guess they're asking if you'll discuss rules of attribution as it relates to ownership in order to achieve something called the 25% rule.
Yeah, there's a 25% threshold. Maybe I'm not understanding the nomenclature around rules of attribution, but effectively, there can be, 25 people out of, or there can be 4 people out of 100% ownership that own 25% each. So that is 4 beneficial owners based on the fact that anyone can own 25% each. But then also there could be an infinite amount of folks with substantial control. So just in terms of attribution, um, to the extent I understand, that doesn't mean that isn't like a defined term for something else. That's effectively how many beneficial owners can exist on a single entity. So hopefully that's helpful. Okay, let's get back into it. I just want to be conscious of time and questions at the end. So the BOI report itself, what is on the report, what information? It's a good amount of sensitive information on both the reporting company and the beneficial ownership group. So the company information, it's pretty straightforward. Legal name, DBA, trade name, if applicable, current physical address of the business, jurisdiction of formation, and then ultimately a federal tax ID number, whether that's an EIN, a TIN, or even a social security number in some select instances. Um, Information on the beneficial owners and the company applicants. So fortunately, it's the same information on both of those individuals, but it's name, date of birth, address, ID number of the US passport, driver's license, or state or local identification document, and then a copy, an image of that document. So this is fairly sensitive information. Obviously, images such as IDs has never been really required on any state compliance filing. So we're finding that a lot of folks really don't have the most secure processes in place to collect this info, given they've largely never done it before. That is really where a good process and a good piece of technology to kind of aggregate this information is really important, as to not compromise this sensitive information on behalf of your clients. And the FinCEN portal really is putting the onus on the end filer to gather the information, and they don't really provide any secure rails or ability to aggregate information in a secure way. So having something outside of just what FinCEN's providing certainly makes sense if you care about the sensitivity and security of your client's data. So, but that is the info on the BOI report, and what you can expect to disclose to FinCEN. So now you might be asking, how do you file? I understand who needs to file. Most of my clients understand what those folks need to submit. FinCEN does have a government portal for BOI filing. It can be found at fincen.gov. I will say the government's portal is very bare bones, and it is not conducive to filing in bulk or monitoring data. And we'll get into why monitoring data is super important. But FinCEN does have a solution. They initially said that it would take 2 to 3 hours per filing to use their solution. I think that incorporates all of the aggregation of the data and the determination of who's a BO and who's not. But I think generally folks are spending at least an hour or two with FinCEN's portal to file in order to stay compliant just with the initial filing. Alternatively, there are software providers such as FileForms who can provide a much more streamlined solution that has the ability to save the information, store it, monitor it over time. Changes of informations do need to be refiled within a pretty tight time period of 30 days. So, our technology really just helps folks stay on top of those changes. It also operates somewhat like a CRM, given the ability to just push people through the filing so that don't forget or miss pieces of information. So you can kind of upload your clients into our platform, allow them to either file on their own or help them get started or even file for them. We have a lot of flexibility. And as I mentioned, we do have a direct integration with FinCEN. So when the information is pushed and submitted, the client's going to get confirmation right away and their FinCEN transcript. Just to touch on the deadlines. So as we said, the reporting began on January 1st, 2024. Entities formed prior to January 1st, 2024 have to report by the end of the year, which is less than 100 days away from today. And entities formed after January 1st, on or after January 1st, 2024, have 90 days from their formation date. You see the footnote here. The 90-day extension, that applies really just to entities that were formed this year. Next year, in fact, anyone formed January 1st, 2025 and onward, those new formations are only going to have 30 days to file. So as you can see, formation, filing a BOI report, it's getting closer and closer to something that's done at the same time, just so folks are aware. And then we've talked a lot about the initial filing so far, but there's also a need for changes of information. So a lot of folks will ask, hey, is BOI, similar to an annual report where it's done once a year? Well, no, BOI is actually a little bit different because when there is a change of information, that change needs to be reported within 30 days of the change. So there's this rolling need, this kind of perpetual need to stay on top of these changes. And that's really where a technology solution can really help. Obviously, FinCEN's not doing anything like creative with their data or letting you to stay on top of it. In fact, some people think FinCEN want you to kind of get out of compliance so that they potentially could send a fine across. But I really hope that isn't the case. And I personally don't believe that is the case. And then lastly, previously exempt reporting companies, they have to file a non-exempt BOI report or kind of notice within 30 days if they end up becoming non-exempt. So that is a requirement. Say if your business drops below the 20 employee threshold or drops below the 5 million of revenue or ends up delisting on a stock exchange or something like that, that would require a filing within 30 days. And then the penalties are steep. There's no two ways about it. $591 a day for miscompliance. That accrues up to $10,000. This is per entity. So if you have 100 entities, this could quickly turn into a 100,000 plus liability. In fact, $1 million liability if you have 100 entities, which is pretty remarkable. And then there's also criminal and civil penalties on the line as well, up to 2 years in prison. So FinCEN's really using this to crack down on bad actors. And there's kind of a joke within the community of folks that provide services like FinCEN might be building jails because there's so many people that might be uncompliant, and it seems crazy to think that they're ever going to take it to that extent. But I do believe that in due time there will be an example made, and ultimately that could inspire some folks to not want to own the liability and just get compliant. But before we get into the FinCEN updates, let's maybe do one more polling question and just address a little Q&A as well, now that we're in it. So are you still here? Yes or no? This should be a quick one. Oh, it's yes or yes. Even trickier.
It's a hard one.
Let's get to 95. There we go. All right. What do we got for questions?
All right. So do I have to file in the state, or does the federal filing satisfy the requirements?
Yeah, it's a federal filing. You got to file it with FinCEN. Some states in coming years are going to have, such as New York, are going to have their own state filing for BOI, but none of that has become active yet.
All right. Do home association corporate entities have to file the CTA BOI?
They do. And FinCEN's been very clear about that. Unless you are a registered 501(c) or nonprofit, homeowners associations do need to file. We actually have a great article on the resource section of our website where you can read all about it.
Okay, and that I think answers one of the other ones. So nonprofits are exempt.
Correct.
And then, do you think tax preparers are responsible to contact all their clients on BOI? Some may never close out the LLC after they close their businesses.
Yeah, I think you need to determine for yourself whether that's something that your clients would find helpful. Is it something your clients would seek guidance from you on? Um, I'll give you a perspective of our professionals that we work with. Yes, they do believe. Over 1,000 folks that are white collar professionals working with us in the accounting or law space. They clearly do feel the need to bring their clients a solution, bring their clients awareness, education, all the different things we bring to the table to support this effort. So a lot of people do believe it is the right thing to do because as you know there hasn't been any true broad campaigns so far to help bring awareness. So it might fall on your shoulders.
Cool. And just because I like to actually type out the answers as well. So it's like you said, you're a 50C nonprofit, then you don't have to report or file.
Correct. Yep.
Yes, that's the same question. Sole proprietor registers a trade name with SOS, but not an LLC. Do they have to file the BOI? Yes.
Yeah.
Um,
So sole proprietors, if you do not register with the Secretary of State or don't have any formation documents in place, then you would not need to file. So sole proprietors potentially do not need to file if they're not registered.
it's not registered. Okay. Harmonization, yes. Our Schedule C is required to file.
Yes.
Yes. Would all officers be beneficial owners of an HOA or just the board members?
Would all officers be members? I think it really depends on whether all officers have controlling decision-making power. So if the officer has zero rights to control the board independently or any significant influence as an independent member, maybe no. But if it's pretty equal and kind of a typical bureaucratic voting structure, then probably yes.
Okay. Um, da, 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 da. Once filed, how do we know that everything was accepted and finalized?
You will receive a confirmation number as well as a transcript, which is a PDF document with all the information that was disclosed to your email. So, yeah, whether you file with FinCEN directly or through a software platform, that should be part of the experience. Certainly is within ours.
Okay. Ba, ba, ba. Are they okay to file by 12/31 or are they past due for the 90-day rule? That should be
So,
before.
so yeah, a lot of people ask, oh, I've already passed my 90-day window. Like if I file, am I going to get fined? Chances are you won't get fined. We actually haven't heard of anyone getting fined yet, and FinCEN has expressed that they haven't levied any fines on anyone just yet. So they're really focused, as you see on my last bullet on the screen here. They're really focused on compliance and ramping up the awareness efforts.
Okay. Um, in a community property state, does the spouse that is not a LLC member or shareholder need to be included as a beneficial owner?
That's a good question. Ian, I remember we got asked this yesterday. Did we get an answer on that? If not, let's follow up with that person individually. I want to make sure we get the right answer out to that person.
Yeah, let's follow up and do some digging. I have not gotten the answer to it.
Okay. Yeah, and some of these things FinCEN hasn't taken a stance on either. So we actually have the ability to get answers directly from FinCEN. So we'll look to elevate anything that isn't clearly stated or answered today from the source.
Would cannabis corporations be exempt since they are heavily regulated by their state agencies?
That is not one of the exemptions. So they would have to file. unless they're a large operating company.
Okay, does a SM LLC that files as a sole prop have to file?
Single member LLC, if registered at the Secretary of State, would have to file.
Okay. What about spouses and community property states?
We can add that to the follow-up questions.
Okay, if LLC does FinCEN reporting and then one of the over 25% reporting owners dies, do they need to file another report to state that?
Yes, because technically there's a change in ownership.
Doing business, yeah, okay. What documents need to be submitted with the BOI report besides the owner and applicant identifying documents?
It's just the image of the ID, and the data fields, first name, last name, address, date of birth, the unique identifier of the ID itself, meaning the number on the ID and then the image of the ID. So no actual documents. You don't have to submit operating agreements. You don't have to submit cap tables or employment agreements or anything like that. It's just really the image of the ID is the only quasi document that you need to submit.
Does the exempt entity have to be a C3 or can it be a C4 or C7?
If this is in regards to the subsidiary exemption, I will follow up with the full details on that because there's actually 6 different kind of scenarios that I can't walk through off the top of my head, but it's a great question and one that we can follow up on as well.
Will individual gig workers who have no business entity but have to file a Schedule C because they receive a 1099 have to file a report?
If you do not form with the Secretary of State and don't have a legal entity, then no, you don't.
Okay. All right, that's a similar question. Will landlords who have their rental properties under a single member LLC and no other activity have to file a report?
If you have a entity that was formed to manage or mitigate liability on your portfolio of investment properties, that legal entity will need to report without doubt. That's like why FinCEN is creating this law.
Okay. I had to register FinCEN ID in order to file on behalf of the company I work for as treasurer. Does my ID filing here cross over in any way with my personal ID.me or other social security / IRS logins?
That's a good question. So when you get a FinCEN ID, which I guess I didn't discuss that thoroughly as part of the slides, but a FinCEN ID is a 12-digit unique string of numbers that is assigned to an individual that wants to use their FinCEN ID as an alternative to providing all of their BO information. So you can go on to login.gov, get a FinCEN ID. It does require your social in order to get one. You do have to upload your ID, the image still. But then the benefit is you can then use that FinCEN ID across many, many entities, which is a little bit easier than disclosing your information across all the entities. Now, FileForms, if you're using our technology, the FinCEN ID is a little obsolete because part of our feature set is you can just add pre-existing beneficial owner information to any entity. You can even do that in bulk across many, many entities with the click of a mouse. But you will need just one FinCEN ID and one social in order to get that FinCEN ID, if that answers the question.
Our state has made it clear that we cannot file or offer advice to clients to file BOI as it is practicing law without a license. Can corporations sign up with you or different companies to file and continue to monitor and update information when necessary?
Yeah, and honestly, we've worked with a lot of the large insurance brokers within the accounting community to offer an outsourced solution so that you can provide a trusted source or trusted solution for clients to get their compliance done correctly. So simply referring to FileForms is certainly not UPL, no matter what state you're in. And ultimately, we can own any of the UPL concern because we're not accountants. We do have CPAs and attorneys on our team, but we're obviously not an accounting firm. We don't compete directly with our clients. So yeah, certainly can be a great solution for folks that are operating in states that have a high degree of UPL measures.
Cool. Can FileForms import data from a database or other software?
Yes, we can. We have an open API, and we also have a CSV upload feature, which is super helpful. For example, if you're exporting from a tax prep software, you can easily upload an Excel file into our platform and pre-populate a bunch of BOI reports. And that's a perfect segue just into these FinCEN updates and then some of the features on the screen. So just to kind of get through the rest of the slides and leave a little bit of time at the end for more Q&A. We got 6 minutes here, so we'll be efficient. But yeah, to date, only 4.6 million BOI reports have been filed through the start of September. So obviously, this is only about 12% of the 40 million that are expected. So a lot of filing expected in the next few months leading up to the deadline. Janet Yellen and others in the White House and the U.S. government have been very clear that there will not be any extension to the deadlines. There potentially could be a safe harbor in Q1, but nothing has been formally documented on that. So once again, the message is to get compliant. Less than 100 days to go until the filing. It's actually 98 days from today. And then FinCEN's tone has been very much focused on compliance and awareness rather than penalties. So I suspect they will make an example of someone. Most likely will be a high-profile case. Think Al Capone, for example. So I doubt the first cases we'll see will be small businesses on Main Street or anyone like that. So, why partner with FileForms, or how can FileForms help? Well, we really do help educate and partner with a variety of CPAs, attorneys, company formation businesses, helping them better service and educate their clients for the compliance needs. We do have a pretty impressive piece of technology that we really want you all to try. So, hopefully this was a good amount of education on the law. And depending on where you stand on UPL or how you want to provide a solution to clients, really highly recommend you all to kind of sign up, check out our technology, see if you like it. There's no upfront costs for joining. Obviously, once submissions start rolling, that there will be expenses, fees with that. But nonetheless, we want to help you. We want to help educate, and we want to make this super easy. We can help people file in 10 minutes. We can help people file in bulk. And, this is a great way to upsell services and also, better serve your clients' needs. So with that, feel free to scan these QR codes. I also think there's links in the chat that you can click into if that's easier. And we can continue the discussion and continue to get through the rest of the Q&A. So, but that's all the slides we had. We can wrap up with some Q&A and hopefully wish everyone a great day. So we got a few more minutes left for questions, folks. 3 minutes. Are you going to have a good day? All right.
Oh, sorry, I was on mute. Sorry. So sole proprietor LLC, not yet filed BOI, but going to partnership in 2024. How many BOI reports required? 1 or 2?
So if there's been no registry document filed initially, then there's no BOI report required as of now, or leading up to the end of the year. As soon as you form that registry document within 90 days, the initial report will need to be filed for that legal entity.
Oh, right. If reporting the death, must a death certificate be submitted or just notification?
Nope, no death certificate is needed. Just simply an updated BOI report removing that owner from the initial filing.
Okay. To compute the 25%, if a husband owns 15% and a wife owns 10%, would the 25% requirement be met? Same question for parents and child or brothers.
I'm sorry, can you repeat the question?
To basically to compute like the 25% rule,
Yep.
if a husband owns 15% and a wife owns 10%, will the 25% requirement be met? And then does that apply for parents and children or brothers as well?
So 25% is the threshold for the individual.
Mm,
So the individual BO needs to own at least 25% in order to be considered a BO or exercise substantial control. So it's not combining individuals' ownership unless potentially those individuals own through an LLC. That's probably another thing just to note. You know, if you have entities owning entities, there's a lookup feature. So you really kind of have to go above that parent code to determine who owns the parent code, and then that drops down to the child entity. So that once again is kind of more complicated ownership structures with entities owning entities, and usually that's where we can really lean in and be helpful.
Has the government sent any notifications out to taxpayers regarding BOI?
There's been some banners and posts on Secretary of State websites. So that's kind of one approach that we've seen. There's been some light television commercials on PBS that folks have started to share, taking pictures of their telephone and or taking pictures of their TV and sending it to me. There's been some press and some pretty notable publishers such as the Wall Street Journal and such. But I think the real marketing effort is really just starting from FinCEN's standpoint.
Well, yeah. So we hit 3 o'clock. It's really up to you, whether you want to keep going or no. Because
I'll take one more question. And if folks got to jump, really appreciate the time, and the questions were great. Few stumped me, so I want to make sure we get those answers and make sure everyone feels good about BOI reporting with FileForms or with FinCEN. So yeah, we'll take one more question and then we can call it a day.
yeah, I've heard that trusts are required to file a BOI. Is that true?
That is true. Determined whether or not the trust is registered. So some states do require trust to register. If so, they will need to file. If not, then they don't. But it's really important. We have a great article on trusts on our website, so please do check that out. Trusts tend to own other entities, and trusts do have controlling beneficiaries and others. So despite the actual entity of a trust may or may not needing to file, the underlying assets owned by that trust, if held in, legal entities, those more than likely will have to file. So, all right. Well, with that, we'll call it. And thank you all for the great questions and the participation. We will be following up with the Q&A questions and then also the CP credits for folks in the recording and the slide deck. So hopefully that's all helpful. And please do reach out to me or my colleagues so that we can continue to serve in any way that we can. Thank you again.
Thank you, everyone, for joining us for this webinar. Please, if you can, feel free to join us next week for our October Tax Talk live event where, we get to speak to all of y'all and actually get to hear your voices and see your beautiful faces. But you guys take care, and thank you again, Frank, for the amazingly informative webinar.
Awesome. Thanks again. Take it easy. Bye.
Take it easy.